Considering I thought on Friday that we were going to bounce and actually be safe at the 2020 on the 200-day moving average, I was wrong on that. I mean, God, we sliced right through that like a hot knife through butter this morning, and every major index is now below their 200-day moving average. And so we're kind of in this level of purgatory. So I wouldn't be so quick yet to say we're closer to the bottom, because quite honestly, if it continues to get tough, we could actually see a test of the January lows. And on the S&P, that could take us like to the 1830 level, 1820 level, which is down another 8% from here, which puts us solidly in correction territory.
One thing that worries me a little is we're getting very heavy volume today.
Right.
And this is volume where almost all the volume is going to stocks on the downside.
Right.
So there is some what we call distribution. This is a second day where institutional selling is coming in for a second day in a row.
Is this capitulatory volume, Bob, or no?
I don't think so.
Okay.
No. I mean, there's nothing really that would indicate that. It's not some kind of dramatic selling climax where all of a sudden we take this whoosh down. It's just been kind of heavy volume all throughout the day.
And bids are not disappearing yet. That's the other, Melissa, that's the other thing. Capitulation, that kind of, you'd see bids disappear.
Well, that's right.
You'd
You
see
get a
more
whoosh
panic.
down.
You're not getting that at all today. As ugly as this feels, it doesn't feel, it actually does not feel panicky. It just feels sluggish and heavy.
Both days have not been panicky, but that doesn't mean there's not institutional selling going on 2 days in a row.
Well, clearly there is, but the other issue is going to be at what point, if we don't get a break from this, then it starts to build on itself. And that's where I think all of a sudden, boom, you get a real move
The only
down.
good news here, Melissa, is we're starting to get towards more reasonable PE levels. So we're down to about 17 on the forward.
On the overall market.
Yeah, on the overall market.
Right.
We're down about 17 on the forward earnings levels.
Take a look
the question
at the
is whether the earnings come down.
The Utes, Bob. I mean, we're at a new high on the year for the S&P utility sector, and you pointed this out before, that there are strategies out in the marketplace, low volatility strategies, which are putting money into these places like utilities and telecom
Consumer
and dividend
staples.
yieldings, exactly, and those are the outperformers. How is that a concern for you?
Sure. Yes,
Kenny,
absolutely.
you?
Well, at the moment, it's not a concern. It makes perfect sense that money's going there, right? People are fearful.
Well, yeah,
and so
it makes
therefore,
sense.
that's a
It makes
defensive
sense,
trade.
but
about
at
a valuation
on a
basis.
22 PE for utilities.
There you go.
Well, look where rates are, right? Rates are near zero. Where else are they going to put their money? So they want to feel safe. Now, that being said, if all of a sudden we start to see a turnaround, which, by the way, I don't think we're going to see any turnaround in rates at all in 2016. I think that's off the table completely. I think money will continue to go into those groups.